A little bit late here, guys.
What is going on, guys? We are at another masterclass. It is Thursday. Welcome. Today we'll just be just answering, fielding any questions you guys have. So if you guys want to go ahead and just start dumping questions in the chat, we'll go ahead and get them answered for you guys.
Yep, totally. Question and A here for you guys. I know you guys like a lot more of this format just to get to answer you guys directly. We try to keep it at about an hour. We'll go over if we need to. Just want to obviously always, be courteous to those that can't tune in right now. Appreciate you, obviously, all you guys being in here and being active, being present. Means a lot to Justin and I, just because we know you guys are taking the time out of your day to be here, to learn, to want to get better. It's always something that we appreciate always. But for those that, can't be here, have to catch it later, family, work, whatever it might be, I want to be courteous to them as well. But glad y'all are here. Want to say thank you guys, obviously, for being here. Means a lot, shows a lot on your guys' behalf as well. Shows that you guys are serious about your trading journey, serious about getting better and everything. But yeah, we will go ahead and get started here. A couple minutes, like Justin said. Just toss your questions into the chat. We'll go through them. Hopefully get them all one by one.
How do I determine levels? Well, if you're in the chat, there is a bunch of videos.
Yep. If there is
dozens of hours.
Yeah. If there is questions that we feel there might be master classes or videos we've already done. Okay. Videos we've already done in comparison to some of these questions, because we could spend, the question here about how do you determine levels. I would say, Justin, you probably agree. Every single video we do is about levels, but for the most part. I mean, every single trade plan that we get together. Excuse me. Sorry, a lot of water. Excuse me. Every single video that we pretty much do every day, whether it's the market overview or pre-market huddle, anything, it's all about levels. It's all about levels.
It's a quick run through.
Excuse me.
Pretty much, I usually use the 1 hour time frame to find my levels that I'm trading on. I think it's a big enough time frame where you see a bigger picture, but it's a small enough time frame where you get enough candles in the day. Get some pretty good support resistance levels. Pretty much like today, Google break and hold, right, would just be the previous recent high, right? If we broke out of that, it would be a nice hold if we broke and held, or if we rejected it, would be a nice reject down, as you can see here. Both plays would have worked. And then where did it base off of, right? Nice support here. Going back, the next level down would obviously be this big resistance level. So if we broke it down below this level, let's say 128.50, essentially, I'd be looking for around 127, right? And you guys can see it's just pretty much, I determine my levels by just finding support and resistance to break it down simple for you guys. But there is, if you go to our YouTube, I mean, every single market overview is about finding levels. Pretty much every single video I do is about finding levels. So check out the YouTube.
I think there's a entire channel in the Wolves University. If you're into the Discord, within the Discord, there is a Wolves University tab that is pretty much all of the masterclass videos for the most part. Charting and levels is the main for your question about the how do you get your levels. I would go and watch pretty much all those videos in there. Really quickly, this isn't the most recent, but someone said, if I buy a put and I need to get out, how do I get out? Is it sell to close? Yeah, anytime you're naked in options, meaning you're just buying an option naked, whether it's a call or a put, you're going to buy to open the contract, and you will sell to close it. That's on both the call and the put side. Right? Okay, let me scroll up here.
Certain candles that you look at to determine direction. There's a couple of different candles, right? We could look for hammers. There's a couple of different candlestick patterns. Hammers are a good one to look for.
Hammers are great reversal candles.
I'm pretty much looking to see, so you can see here's a hammer candle here, hammer candle here, but we're pretty much looking, hammer candles are good. I'm looking for long wicks. I'm looking more so of what the candle is telling me versus the actual uh, candlestick.
Yep.
I'm looking to see what is happening at my levels. Okay, if we're getting it coming up here, we're getting some long wicks we can't break above, then would be a good time to take a short, right? Would be a good time
Yep.
to take a short, because what do these wicks tell us? They tell us that there is selling, right? There's selling pressure happening from the upside. Again, we do have a whole masterclass on candlestick patterns as well. Pretty much write these down. Evening star, morning star, evening star, morning star, shooting star, inverted hammer, hammer, gravestone doji, hanging man, hammer,
Yep.
tweezer bottom, tweezer top, bullish engulfing, bearish engulfing. I would look at all of these candlestick patterns and learn them, right?
Yep.
So I'll go over one more time. I'd say evening star, morning star. So it'll be morning and evening star. There is shooting star. There is your hammer, inverted hammer. There is your hanging man. There are tweezers, and there's engulfing.
Yep.
Those would probably be your biggest ones to look over.
Yep. Those will be great. Excuse me. Excuse me. Those will be great. Those will be great reversal candlestick patterns to determine direction. We have, I think, probably just a couple weeks ago, Justin, we did a kind of more momentum trading, understanding momentum, where a stock is going, understanding the candlesticks, which give momentum. We talked about it to determine the direction. Yeah, if candlesticks are like, let's just look at this. We're on the Google chart here. This is great. In the morning, this morning, right at the open, actually right at 7:30 Justin's time. You got a long wick down, and then you got 1, 2, 3, 4 candles to the upside, decent bodies on them, but you could see, right? You could see that there is momentum to the upside there, right? There's momentum to the upside there with some larger body candles. And if you looked over to when the market kind of balanced a little bit on the Google chart, the candles got a lot smaller, right? Smaller candles typically means not as much momentum. If you see a large green bars, which I call it green bar, this is a big green candle, or large red bar candle, those will show that the buyers or sellers within that time frame are more present, right? The one thing I think determining momentum is very important is always try to simplify the market as much as you can, because the market is kind of, I'd say, the broader consensus of the market is it's extremely complex, and I'd say 90% of our population has been bred to believe that it's too complex. It's overly complex, and it's too complex for the regular person, i.e. us, the retail traders, right? When in reality, the market is just it literally just tells a story every single day of buyers versus sellers. That's it. Every single time frame, whether it's the 1 minute, 3 minute, 5 minute, 1 hour, 4 hour, daily, weekly, every single candle just shows a battle between buyers and sellers. That's typically it. The market cannot go up if there's not enough buyers, and it can't go down if there's not enough sellers. So I always tell everyone that I talk to, and tell you guys as well, is simplify the market where you can. Always simplify it where you can. Why? If someone says, why did the market go down today? Simply, you have to recognize there was many more sellers present than there were buyers. And as cliche as that sounds, it's still the God honest truth, right? There were enough sellers present, right, at 460, 459.50, wherever we got to today on SPY. There were more sellers present waiting to come into action up there near 460, right, than there were buyers up there. That's why the market ultimately overcame with sellers and ended up trending down towards, but it wasn't a true trend down day, right? It jumped up, it came down, it bounced a little couple times, 3 times it bounced, ultimately having that last 2 hour of the day sell, right? Ultimately. So not to sound like, cliche in the sense, but it is simplify the market where you can. Okay. Every single day is a battle Every single candlestick, whatever chart you're on, is just a battle between the buyers and the sellers. If it's a large green candle, there were a ton more buyers and there were sellers present in that candle, i.e. the market went up. Okay. Same thing as the downside. They have large red candles down. Okay. Then the market, had many more sellers than there were buyers in that present. And that doesn't mean, like, just because we had a down day today doesn't mean the market's going to go make new lows now. Like, that's not what that means. Even in an uptrending market, you're going to have down days. The market goes up and the market goes down. If you just take a chart from even the year 2000, and Justin, you don't have to do that. But like, if you took a chart from, from 2000 until now, the sellers have always won. I mean, even if you just look, here from 2017 and up, right. The market is slowly trending up. Does that not mean that there are sell times or where there are sellers? Of course, there's going to be sellers, but ultimately the market went up. Ultimately in the market, just remember this subtle fact. Is there more people buying for the long term, or is there more people shorting the market in the long term? Okay. In the long term, the market has always gone up. That has been a true and hard fact, right? That's why, I always forget his fucking Warren Buffett. Why I forget that name every time. He always says, I don't look at a chart. I don't, but hey, I kind of believe that he really doesn't look at a chart and trade off a chart. He trades off of companies that he likes and companies that he knows are going to do well. Ultimately, when their company has down days, down months, down years, i.e., let's say an Apple is one of his biggest holdings. I think Jesse might correct me if I'm wrong here. Coca-Cola, Exxon Mobil, or one of the gas companies.
Oxy.
Thank you. Ultimately he is buying these companies on discount, right? Yeah, sure. There might be a period that there is some downside, but ultimately have the charts really just gone up? Yeah. Ultimately the chart, the stock market has gone up. And I want to just also, and I'll end this answer here. It's very long-winded. And I'll circle back, but you guys need to remember that, even before the COVID thing, even before you see it 2018 to 20, there was the tariff thing that went on with Trump, and there was a lot more volatility in the market there. But even if Justin went back to like 2000 to 2018, what did the market do there really? I mean, 2008, we had the recession. Okay, sure. We had some selling. We had some fearful people. Sure. But from 2009 to 2000, and as he zooms in here, 2018, 2000, it just kind of trekked its way on up, right? So long term, the market has been full of buyers, people in retirement accounts, 401ks, Roth IRAs, etc., right? Most people are buying for things to go up. Now, granted, you guys have survived the 2020 crash where everybody freaked out. I mean, SPY went from almost 50 to 225. And that wasn't even, what is this, the weekly? It took 4 weeks and we dropped that big. That's insane. Okay. But what ultimately happened after that? Motherfucking dip buyers came in and rose that to new all-time highs, right? Outside of what the Fed is doing, outside of all that kind of stuff, long-term buyers have always outweighed sellers in the stock market specifically, right? So within uptrends, within bull markets, the market's always been a bull market. You guys survived from 2022 to 2023 when the market bottomed. That whole year, sure, we had a downtrend, but look what we've done since then. You had 1 year out of the last 20 that's quote unquote sellers won. But even within that 1 year, how many bounces were crazy buy bounces, right? I mean, look at some of these bounces versus the bull markets. The bull markets ranges were so small. It just gradually made its way up. Every one of these bounces in a quote unquote bear market still bounced pretty significantly, right? So to tie it back to how to determine trend, guys, you just always take it back to every single candle, anytime, any time frame you're on. It is just telling you the battle between buyers and sellers. That's it. Just because today we dropped from 460 to 452, okay, that doesn't mean the world's going to shit. That doesn't mean the stock market's going to crash, and we could go lower from here. That's fine. But ultimately, that happens. That happens. There are sell days that we're going to have. The market can't just have unlimited green candles. It would be too easy at that point, right? You would just wake up every day and just add to your retirement accounts. Doesn't matter. SPY at 400, SPY at 450, SPY at 350, whatever. Buy. It doesn't matter. And it's just always going to go up. Okay. You're going to have days like this. Now, days like this are days that test you as well. Just because we had a down day today doesn't mean we're going to have a down day tomorrow. And we could have a down day tomorrow. We easily could, but we need to wait to let the price action tell us that we're going to have a down day tomorrow. So you don't just market opens at 9:30 a.m. in 1 second tomorrow and you're fucking full-fledged on puts. That's not smart to do, right? We had a pullback today, but here's the thing. I'm not saying it's going to happen, but we could easily have an 8-point up day tomorrow. That could easily happen. Not saying it's going to happen, but it could easily happen. Just as easily as it went down, it could go up. Just as easily as it went up, it went down. Okay. So every day it's important to not have a bias and let the market tell you what the buyers and sellers are doing. The people that actually move the market. We're just little specks, little freckles on the market skin, if you will, of a body. Let's have a human body. We're just a fucking freckle. The institutions, the big boys, the hedge funds, the this, the that, these are the people that move the market. So they're going to tell us where it goes. And we need to make informed decisions from there to understand what the trend might be, what the momentum might be, have a balanced day, have a trend day, etc. Right? Always look, long-winded answer short, always look at what is happening. What is the chart telling me? Okay. Are there more buyers or are there more sellers present? Okay. Short story long. There you have it. Justin, if you want to add anything to that, probably.
Typically, if you want to just follow a trend, a bullish trend is higher highs, higher lows. A bearish trend is lower highs, lower lows.
Yep.
Make it pretty simple.
Okay.
How do you explain gaps? So gap is when there is a price and typically where it closes and opens back up. You can see here's the close, here's the open, there's a gap in price.
Yep.
Typically we would like to trade the gap. And typically when gaps get filled, you get a nice, pretty big bounce here. But today we had news, we had FOMC, we had Daddy Powell speaking, which overweighed and pretty much got us our sell at this location.
Yep.
But pretty much gaps is just where there's a close in a price, an opening in price, and a gap. You'll see it on the chart. It's just a big open area.
It's
typically
viewed as an imbalance as well.
Yeah.
It's viewed as an imbalance. The market wants to go fill imbalances and be balanced up for the most part. Typically in an uptrend, if a stock gaps up, if it fills its gap down, okay, basically just going down to yesterday's close price, it'll likely be met with buyers that were there to drive up the price to that level from the close and then usually bounce. Now, you're going to say, well, it didn't fucking bounce there today. Well, here's the one thing you have to accept. The market is truly unfucking predictable. And if anyone had a crystal ball and could tell you before the market opened, this is exactly what's going to happen today, you wouldn't even know who that person was. That person would be a goddamn gazillionaire. They would be off the grid. They would be having Mai Tais on the beach by 9:35 a.m. Eastern Standard Time. Okay. Right. So the one thing about trading, you need to learn, the market is truly unpredictable. The market doesn't care about you. It doesn't care about what the Fed is doing, as we've seen that as they've hiked rates over and over and over. And we're in an uptrend, which is, economically supposed to be a bearish sentiment, but it's not. The market will do whatever the market wants to do. So you have to accept that risk. If you take a bounce at a level and it doesn't work, okay, you're not wrong in the sense of your strategy. It's just today was not the day for the market to bounce there. Typically it does. Typically in an uptrend, a gap fill down, okay, a gap fill down and bounce has been a high probability setup. Let's say it hits 9 out of 10. Today was the 1 out of 10. Okay, I will take a 10% failure versus a 90% success rate any day of the week. Then it comes down to, well, I got my ass handed to me because I went all in on the bounce and it didn't happen. Well, that's risk management issues, and that's actually on you.
Yeah. So the stock market is all about high probability, right? There's no guarantees. You have to accept that when you enter into a trade, it's a 50-50 chance of either losing or winning, right?
Yep.
If you have an edge, if you have a strategy that's been proven to win more than losing, obviously you have a good strategy. That's the point of it. But no strategy is going to be foolproof. Not everything is going to work out exactly the same every single time. So what we deal with is in high probabilities. What's the highest probability that happens when we get a gap fill down?
Yep.
We get a bounce, right? 7 times, 8 times, 9 times out of 10, there's going to be a bounce on the gap fill down. So we're going to take that trade, right? We're going to constantly take that trade over and over again. Why? Because it's proven that it works more than it doesn't. Mm-hmm. And I think the biggest part where a lot of people begin to lose or they don't understand is like you said, the risk management side of it. They said, oh, well, it worked this time, so I'm going to double it this time, or I'm going to full port it this time, right? No, that's not what you do,
yep,
right?
Absolutely not.
So let's just say, like, you know what I mean? So you play with the same amount of money. If you play with a $500 trade, right, every single time, then you trade $500 every single time. You don't go, well, it worked last time $500. I think this time I'm going to go
2,000.
Yeah, $2,000
because I made 100% on yesterday. I made 100%. So shit, I made 100% on 500. Well, shit, I made 500. But, and this is the biggest fallacy. Well, if I would have just had 10,000 on that trade and I went 100%, I would have made $10,000. Nope. That is not it. The market doesn't care about your money. It doesn't care about anything you're doing. Okay. All you need to do, and Justin and I talk about this over and over and over, you do not trade to make money. You trade to execute. And flawless execution will have a byproduct of money. Okay. We'll have a byproduct of money. By saying it worked last time, I'll do it again and double it, triple it, quadruple it in this sense. That is gambling. Okay. That is gambling.
Absolutely. So I think one of the biggest things you guys need to understand is risk management truly is going to be what either makes you or breaks you, right? We talked about it last week as well, pretty heavily, but it is important when it comes to Fridays, right? Tomorrow's Fridays. What do we see? You see every single Friday, somebody says, I wiped out my entire week's gains. How is that possible? If you are actually practicing good risk management, should be impossible for you to wipe out a whole week's gains with just one trade or one day, right? That's where risk management comes into play, right? You should be playing with the same amount every single time. You shouldn't be sizing up all crazy. You know, one trade shouldn't really cancel out your other trade. You have to let your winners run. Cut your losers fast, right? And this is something you're just going to have to get with experience. It's not something that you can just read about or just retell you, right? It's going to come with experience. You saw me hedge my position 2 times, right? Once yesterday, once today, right? So you guys saw me. This kind of goes into one of the questions asked. I look to see what the price action is telling me. So let me go to SPY real quick. So looking like a trap in the beginning, right? Usually they like to trap us. We kind of weren't selling off. Even after the news weren't selling off. So we're like, okay, this looks like pretty trappy. We might get a bounce up, maybe retest the highs. And if it sells after that, oh, well, we're in calls, right? We could just take profits there. But we took calls, right? And then it started selling. So we're kind of sitting in this position here, right? We're kind of sitting right here, right at this level of demand, right? So you guys can see that right at this level of demand. because this is when we took the puts, right? So we took the 458s on live voice, sitting at this level of demand right here, right? So what I was going through was like, okay, well, if we came down to this level of demand, there should have been buyers here. We should have had a bounce, right? A nice big bounce out of this demand. We weren't, right? We were just kind of sitting there. So when demand turns into supply, you'll see, all right, we're not getting a big bounce. There's no real buyers coming in. More than likely, we're going to sell. So what I do, cut the calls, jump into puts, and then we rode the puts down, right? Then we rode the puts down. So you always have to look at what's going on. And this is where you practice good risk management, right? Don't sit in a call or sit in a position where, all right, the price action is telling me something else. Just cut it. Just cut it, right? So the price action to me today was telling me, okay, I'm in the calls. We're sitting in this demand. We didn't really get a bounce out of the demand at all, right? Just sitting here, and we're not getting a bounce at all. There's no buyers showing up. All right, I'm going to jump into puts. I'm going to cut my calls, and I'm going to follow what the price action is telling me. So one of the things to risk management is don't stick with one bias. Look at what the chart's telling you. If it's telling you down, then it's telling you down, right? So we explained gaps. You explained
Gaps.
the put position, hedge
Hedge
call.
positions. Oh, okay. You just did the hedge. Okay.
Yeah.
Sorry, I stepped out to grab a little bit of water.
No, I was just saying, I was in calls at first. We came down to this demand right
Yeah.
here. We weren't getting a bounce. So that's where you cut the calls, jumped in the puts, and then we rode the puts down.
Yep.
Why did I hedge that position? Well, because we're in this demand, we didn't get a bounce. It's just sitting there. So that's telling me that this demand is more likely going to turn into supply since no buyers are showing up.
Yep.
And that's when we got the sell.
The other thing with SPY, I want to make this clear. If you're a newer trader, somebody with a small account, etc., SPY is like, y'all been in a toxic relationship before? Like, truly. You've been in a toxic relationship where you love that person so much, but you know they're not good for you. But you can only be in that relationship if you know you're a strong-willed person, right? That's kind of like SPY. SPY is not something that you want to get married to. It's not something that you want to hang around with too long. You want to be in and out of SPY for the most part, especially if you're a newer trader. I'll say this, just stick away from SPY because SPY offers 0 dates, and 0 dates is enticing as they are because they're so cheap, so inexpensive. Oh, I could buy something for 50 cents and it could go to $2. Great. Great. But you could also go straight to zero, right? Stick to playing weeklies on the individual names within SPY. We talk about SPY all the time, right? Stick to individual names. Okay. Because SPY is more or less, nicer way to put it, erratic. It is that crazy ex-girlfriend that you should never have. All right. Or ex-boyfriend, whatever. Anyway, that's my 2 cents to SPY. I mean, even myself, I've been trading SPY exclusively for, probably the last 3-4 years or so. And although I think I have a good grasp on her, sometimes you don't. And that's the market. Every single trade setup that I have, and I'm hoping you guys could vouch for me here. Every level I've given is, I'd say, decently pretty fucking spot on. Right. But is there a day like today where shit goes against you? The trend changes a little bit? Sure. But 9 out of 10 times I've been right. I'll take 9 out of 10. 1 out of 10, I get it wrong. I'm not just going to go switch up every fucking thing I know, every bit of my strat. No, it happens. I accept it. I move on. I was sized appropriately. Okay. And that's the second part. I was sized appropriately. And I knew the risk. Being a lotto, I knew, okay, if this whole thing went to zero, is my account fine? Am I fine? Is my mental fine? Absolutely. Right? Absolutely. The one thing that messes many people up is, oh, I don't have the time to day trade all day. Oh, somebody says they're getting in this. Oh, I haven't looked at a chart. I haven't looked at contract prices. I don't know anything that's going on, but I'm just going to follow blindly. Okay. And sometimes that works. It does work. Right. But that's not the whole premise of why Justin and I started Wolves. Well, it's not the whole premise of what we do. Okay. I would much rather you come into the chat with a ticker I've never heard of. I've never traded. I've never done anything. Post your thesis. Say, I'm taking this. I'm doing this. You take the trade. You do great. I'd rather you tell me what I should be taking, because that tells me what we're teaching you guys is the right thing to do. Right now, that's not going to work right out of the get-go. Of course not. You need to follow some people. You need to listen to some people. Today, days like today are going to happen. But let's look back on SPY really quickly, just from the last even just 2 months. You would be stupid to do anything else besides buy the dip. Right? Wouldn't you agree with that, Justin?
Absolutely.
Buy the dip has been, that's the trend. It works 9 out of 10 times. Buy the dip, buy the dip, buy the dip. Even just in the month of July, just look at this. If you bought every dip, you'd be doing all right. Now, granted, we had one day where no, buying the dip didn't work. Sure. Out of 30 days, one day it didn't work. Or what do I, 28th day? 28th day didn't work. Okay. You accept it, you move on. Okay. But if you don't have any risk management, which we tell you guys all the time, risk management is everything. You have to have risk management. Okay. So I hope that kind of makes sense to you guys. The
You can't
market
get
is
so caught up on just your last trade. I think a lot of you guys get so caught up on, oh, this is the last trade, or this did this. Like, you know what I mean? You can't get so caught up on your last trade. Happens, move on. If you lose, move on to the next one, right? You keep moving on. Don't get caught up on your losses, but also don't get super caught up on your wins, right? Kind of stay at that good level playing field, right? Don't get super hyped. Don't get super confident, but also don't get so upset over your losses, right? They're going to happen.
The moment you ride your high too high, the market will humble you. The moment you ride your low too low, it will continue to keep you low. Right? That's why trading is, the actual trade of trading is one of the hardest things to do. And the reason it's the hardest thing to do is because it has the greatest reward behind it. If you could truly teach yourself how to trade, there are avenues and doors and money that you can make and open up that you would never even fathom. Right. And you guys, just because you guys are here in the chat with us right now, I know you guys know that. Okay. You know that. Okay. So just remember that. Okay. Just remember that this is not going to be easy. If it was fucking easy, everybody and their mother would do it. I can guarantee in all of your guys' lives right now, you might know one other person that knows 10% about the stock market, might not even know anything about trading, but knows just a little bit about the market because they've got some long-term stuff. But if you have anyone in your life that trades regularly, then you're blessed. First off, I've been doing this for years, and I know nobody in person that I see every day or talk to once a month, right, in person, that trades. It is a very small group of people, right? So the fact that y'all are even here right now, okay, and doing this, just know it will heavily pay off in the future. But it's not going to be easy. Just like losing weight is not easy. Losing weight is not easy. Got to eat right. Got to go to the gym every day. You got to make good decisions every single day. Right? It's much easier to be overweight or not in shape. Right? Just like it's much easier to not trade because it's very hard to do. Okay. This trade goes into all aspects of our lives. All right.
Absolutely. I'm searching through the questions, guys, to try to find the next question on here. Do I set alerts? Sometimes I do set alerts. Alerts are always good. I would set them in a 50 cents price range. So if your alert is at 460, if your level's 460, set it at 459.50 for it to go off. So if you're going to set alerts, I would set it in a 50 cents price range. One, anybody who knows me knows I like to average into a trade within a 50 cents range. Two, 50 cents will definitely give you enough time to, if you're not at the computer, it'll give you enough time to open up everything, and hopefully, unless it's crazy running, but typically it will give you enough time to go in and look at the chart and make a decision on the trade. But yes, alerts are always good if you can't sit there and just watch everything.
Yep. Within 50 cents. If everything went down to the exact penny of a level, then we'd all be rich as fuck. We would just set buys and sells at those exact levels and we wouldn't have to do anything. But that's not the case. You got to be a trader. Got to be a trader. Can you fix stupid? Well, my parents and my girlfriend will tell you you cannot fix stupid, unfortunately. No. Can you fix stupid though? You absolutely can. Especially when it comes to trading. This is the biggest thing, and it's cliche as fuck. If you're doing something stupid, it's more than likely the exact opposite of what you're doing is the resolution. If you're FOMOing into trades, you need to practice patience. If you're sizing too big, you need to size less. That makes sense? It's cliche. It's extremely cliche. It's the oh, I can't do I'm fucking up doing this. Okay, we'll do the opposite. Like, well, no shit, Sherlock. Yeah. Oh, well, yeah. Thank you. Obviously, but it is the ultimate truth. Trading is there's not much gray area in trading. It's very white and black. You're either doing exactly what you need to be doing or you're not, right? And that's hard. That's hard to accept. That's hard to admit. That's why this is a very tough trade, quote unquote, to do. Okay, I gotta scroll down a little bit. Usually don't trade on the downside. I do. Oh yeah, we answered that. Okay. Yes. Buy to open, sell to close. Buy to open, sell to close. If you are in any naked positions, do you set alerts for your levels? Yes, within 50 cents. Yes. Do you guys have a course video on RW? RW. RW.
Yeah, I don't know what RW is.
RW. Resistance would be R.
Maybe risk to reward or risk.
Oh, risk to reward.
What's our R? I don't know.
I don't operate in the art like, oh, if I buy this level, it's a 4-to-1 R to R. I don't, because you're more so often than not, we're trading things where we are trying to be in and out in the same day. I think R and R is a better term for like swing trading. Like if you're just buying a major support, like if you're, yeah, I mean R and R, yeah, sure. If you're buying commons or you're buying a lot of time on your contracts, then yeah, you can hold through the duration of your trade for the most part, and you can calculate an R&R. Sure. But I can't sell like today. I can't sell 460 on SPY and know it's going to 452 and be like, and at 460, I go, yeah, that's a fucking whatever R&R trade because I know it. I got no idea where it's going. We could have went down to 458 and bounce, but you said, oh, you had a 4-to-1 R&R at 460. Then it's nobody knows. And then we could have made new highs after that. Anything could have happened. So if you're like short dated things, especially when you're trading SPY, 0 day, 1 day, 2 day, 3 day to expiration, that move needs to happen rather quickly. Now, if you're swinging longer dated, sure, you can come up with RW, but do we have a course on it or a video on it? No, because that's not typically how I operate in the R to R. When I do use the term R to R, I think the risk to reward of a bounce or a reject or a break and hold of that area is more favorable. I'll just use that term. I won't give actual numbers. Justin, if you have anything else on that, that you
risk
want
to reward's
to
good. I'm gonna
add
risk
to?
this to make this, right? I mean,
Yeah.
it's very good on textbook. Just try to execute, right? Just try to execute. See 20, take 20. If trade's still going your way, stay in a trend, stay in some runners and ride it and take profits, right? I think so many people are like, oh, my risk to reward, it gets too much, right? I don't really buy into that type of idea of trading. So I buy into the idea of it's at my level, I'm going to execute my trade. And if it happens, it happens. And if it doesn't, it doesn't, right? Obviously, a good risk to reward is what we're looking for. We're not going to risk $100,000 to make $100. Obviously, I understand that part of it. I'm not looking at like, I'm going to put in $100,000 in this position to make $100. I understand that if I'm at a big support at a big resistance, I should get a big move out of it. Right.
Absolutely.
But I'm not, trying to toss in for a little scalp play $100,000 to make $100.
Yeah,
right?
that's
Still practice good risk management.
Yep.
Terms.
Is break and hold of any level on a 5-minute time frame grounds to take a stab at a trade? I would say
I do like the 5-minute time frame.
I do like, I do think that's good. I personally break and hold on a 5-minute candle. Like, let's say some stock is at $100. Let's just, break $100, whatever the stock might be, XYZ. It breaks. Let's say it goes to 101, 102, whatever. My personal break and hold, Justin's might be different. It just depends on your risk profile. My personal thing would be if that was a big level to break, if it were to retest it and it was a true level, it would hold that level on any retest. So that retest might come that day, might come tomorrow, might come 3 weeks. I don't know. But me personally, I am more of a break and hold of a back test of that area, whatever it might be. Does that make sense? So yeah, if you are a break and hold on, let's say that first 5-minute candle breaks through 100, it closes at 150 cents. And you want to buy calls there, you're going to be buying an inflated premium, and you better be confident that, or you better have a risk tolerance on that trade where it could dip a little bit after you get in the trade. You better be ready with some red, because if it back tests 100 and you're buying options on it, that trade could easily go red, because you could be buying the top of that premium for that contract. Does that make sense? So yeah, I do. I like the break and hold of the 5-minute. I think Justin does too. I personally, Justin's a little more risk averse, I say, than I would, and I am, and that's fine. There's no fucking a million ways to skin a cat, right? I think I like to see the back test and hold, then take the long, right? Because I think that there is also the premium on options goes on discount. Trading options is specifically hard because there's extrinsic value to the options outside of just trading commons. If you were to just trade commons or equity and you bought at 150 cents, okay, and then it dipped down 50 cents, you're probably okay. You're only down 50% or 50%. You're only down 50 cents on the position. Versus trading options, that 50 cents, depending on what contract you buy, could mean a lot. If it's a 0 date, if it's a weekly, right? That makes sense? So hopefully I explained that well. It just depends on your risk profile and your strategy and what you like as a trader, right? What you like as a trader. How long should a novice wait before taking a trade? Also, how many tries do you usually attempt before closing the shop for the day? What is your pause period before attempting a trade? I know it's a loaded question, but thank you. Before a novice takes a trade, you need to understand what you're trading. So if you're trading equity or trading commons, you need to understand what that means. If you're trading options, you need to know what options are, how they're priced, what they do, how they move. It's very important. You need to have a baseline understanding of how those vehicles operate. I would always say this too: if you're a novice and you're not a beginner, it doesn't matter how cold the pool is, you got to jump in it before you swim, right? So if you're going to get up to the plate, are you just going to take every pitch, even the ones that come right down the middle? It's completely on you, right? Trading is a one-on-one game. So how long should you wait? You need to wait until you are confident, and maybe you just watch and not even paper trade, but you just write down in a notebook, like I still do all day. I write in a notebook, different strikes, different things that I see. I see setups that I don't necessarily take or even alert, but I just watch them all day. Write it down. I'm watching this strike, this price. This is what I would enter in. I see this bull flag. I see this double top. I see this liquidity grab. I see a hammer candle, whatever. Then by doing that, you get a little bit more confident in what's the strategy that's best for you, because just watching it on a screen and saying, oh, I would have, could have, should have, I would have taken calls there. Yeah, I would have taken, yeah, I would have. Tomorrow, you're not going to remember that, right? You're not going to remember, oh, you would have taken calls there. But if you have it written down and you review it, then it might reinforce the strategy or setups that you like trade and take, right?
Usually typically like to take 3 trades a
You can
day.
answer that one.
Like three trades max a day. There are some days where I go over that rule. Today was one of those days. Just one of those days where I wanted to take some trades, right? I wanted to take some more base hits. I missed the move. I was upset about it. And then so I wanted to take some bounce plays, right? And then we banked on them, right? We took 3 bounce plays, last one going over 100%, right? But typically, yeah, I like to stick to 3 trades a day. Max. I think 3 trades is kind of the good max that you should limit yourself to. When you're first starting out, 1 trade a day, stick to that, maybe 2 max, but try to just stick to 1 trade a day and then just in there, right? And then keep moving on. Oh, I was just, there was no reason for the yearly chart. No, levels that have been broken, we don't erase them. We still keep them on. Like, for example, right, I have SPY here. All right, all these, right? We broke them, right? But I didn't erase them. And now you guys can see how well they played out, right? So all these levels were previously drawn, and then you can see how well they played out to today, right? So you guys can see why I took, my bounce trades, right? They're playing to my levels, right? So no, just because the level gets broken doesn't mean it doesn't work anymore. I think a good example also is on Amazon, right? Amazon's still playing out to levels, right? So if they're major levels, they'll still get played. The stock will still play to them over and over again for weeks, and then sometimes for months at a time.
Yep.
Is it not a mistake? There's so much demand versus supply. The world goes wealthy, and the wealth is not a mistake that there's so much demand versus.
I'm not sure if they're asking or if that's a statement.
I think it's a statement.
Is that a statement?
Does the daily candle give indication of the next day? I mean, that is a bigger picture.
It definitely could.
If we're looking at the bigger picture, let's go to, I like SPY a little bit better.
Yep.
SPY is good because actually, here's a good question. What candle is this? What daily candle is SPY showing us?
Quiz.
Someone type it in the chat.
Quiz time.
Someone type it in for me. Yep,
Down.
Stuart, you are right. Brian, you're right. Yep, bearish engulfing.
Bearish engulfing is what we were looking for. But yes, you guys are not wrong.
So looking at the daily, right? The daily, the higher time frames is going to give you, the bigger view, the bigger sentiment of what's going on. Looking at this, absolutely, it looks bearish.
Yep.
Right? Absolutely, it looks bearish. So overall, the sentiment looks like very possibly we can get maybe a little bounce up, and then we finally get that big pullback that we've been looking for.
Continuation down. Yep.
Possibly 445, right? And possibly obviously lower, but I'd be probably looking 450 first and then 445. Why? Because of this level, pretty big level, I guess 444. But yeah, so daily doesn't necessarily mean it's going to tell you exactly what's going to happen, but it can tell you what can happen, right? For example, right, this could have signified, okay, maybe there's a reversal about to happen in the market, right? Right here on this candle. But guess what happened? Boom, huge candle up, and then we got a reversal after. So yes, absolutely. Can it tell you what is going to happen? Definitely. Is there a big bearish engulfing right now? Yes, absolutely. Does look like there is a big reversal about to happen, especially since we pretty much balanced out, pretty much plateaued, couldn't really break to a new high. And then we have a huge bearish engulfing. Does look like we could definitely see some downside going into these next couple of weeks as a pullback. Does that mean it's going to go straight down? No, it doesn't mean it's going to go straight down. We can go up and down. But
it could stay in this little balance area. I think what the daily could tell you too is if you mark the previous day high and low, if we break below or above those levels, there's a high likely chance of continuation in that way. Right? Absolutely. There's a high likely of continuation in that way. So that's one thing you'd want to mark. Oh, but you guys can see here, right? We had a little resistance, had some support there, right? So if we break below this 450, 152, whatever, if we break below it, it's likely we can come down and see some different areas underneath there. Okay. Probably not this, only in the Simpsons. Okay. Would you recommend taking puts once it broke yesterday's? I know I would recommend taking puts once it breaks the previous day low And in an uptrend, I would recommend taking a break of the previous low and possibly a back test, like a break and hold of the low, and not just a wick down or liquidity grab below it, to take the puts, especially in an uptrend like we've been, right? Hope that makes sense. You name some candlestick patterns, but what are some of your better resulting reversal or continuation patterns? Head and shoulders, wedges, flags, cup and handle. Typically within those patterns, you will see some of the candlesticks, right? Like, especially like, let's say like a bull flag on a smaller time frame, if it's a bull flag, you'll see some wicks down within the bull flag. Like the market might be pulling back in like a slight pullback intraday within a bull flag, but you'll see wicks down, which is showing that buyers are pregnant. Jesus, present. Buyers are not pregnant. They're present, and buyers are present. Then it will show you that it's more than likely that we can continue up and have that flag, right, come to fruition.
Yeah, like right here we have, right, a nice bull flag. Boom.
Yep.
Push up. Bull flag, push up. Bull flag, push up, right? So yes, I think bull flags, bear flags are probably my favorite on the higher time frames. Head and shoulders is always good. I do like wedges up and wedges down, but I say my favorite type of trades to take, especially if you're looking at the daily or higher time frames, is a bull flag or a bear flag.
Yep.
I'd say wedges would be after that, and then head and shoulders would be after that.
Yeah, head and shoulders, I would think kind of least likely to play out, but they do. But I don't like them. I'm not going to solely take something off of head and shoulders, me personally, or inverse head and shoulders. Are you taking questions on individual stock picks tonight? Not tonight. Tonight's just Q&A off of just kind of trading in general. We won't just go over and just chart things for your liking, because if we did that, we would more than likely chart until the market opened tomorrow. Okay. Maybe one night, Justin, we could do a masterclass where we just
sit there and
maybe we gather like 20 stocks or something like we used to do back in the day.
Yeah, we could do that.
And just we'll just chart all of them out and just go along with everybody. So, if you guys like that idea, give us a yes or a thumbs up in the chat, and we could easily do that and just kind of have all of us chart them together, right? Chart them together. Do you use the same amount of contracts when you swap directions?
You should. Yes, absolutely.
You can. It's
if you have higher confidence in the other direction and it's showing you,
yeah,
then you can size up a little bit. But typically for proper risk management, you're not going to double in size or quadruple in size. You typically want to be around the same amount that you were with the original position.
It also comes back to your risk tolerance as well.
And here's the thing, right? I think I know I hedged 2 times, 2 days in a row. It's probably like, I don't know, maybe my 3rd and 4th time I've done this the entire year. So don't think that like this is something I do all the time. This is market's getting in a weird way right now. So I just hedge, right? So it's not something that I do all the time. I don't really recommend it. Comes with a lot of experience. Because if you start to get into hedging, especially if you can't be profitable by just taking one trade in one direction, you're going to get into a trade, it's losing, you're going to hedge it, and you're going to sell for a loss, and then the hedge is going to come back and it's going to be a loser, and you're going to sell that for a loss, and you're kind of going to play this back and forth. And I promise you, especially while you're starting out or in the beginning, hedging positions is going to get you even more clapped than just staying in one position. So I would stay away from it. I know I did it 2 times in a row. It's the most rare thing you'll ever see. So
Yep.
I wouldn't get used to it or.
But no risk. Do you not think SPY is the king of the best stocks to trade by far? Yes and no. SPY is great. The R&R is there for amazing returns. Like today, probably could have got a contract for $1 and rode it to $5, $6, $7. Sure thing. Absolutely. But if you diddle in the middle on SPY, you're going to get the fiddle. Nobody wants the fiddle, right? You can easily have that trade go to zero. Okay. So is it the best stock? No, it's not the best stock. Is it a great stock to trade if you know how to trade it? Absolutely. Absolutely. I bought some SPX puts for 55 cents, sold it for $1.05. It went to 25. That's great. Listen, you made 100% on your investment today. That is nothing to be upset with. Did it go more? Sure. Sure thing. Did
How many days does this
yeah.
happen?
Yeah. Look.
How many days do we get a sell-off or a crazy run-up where you go from 55 cents to what, 25 or whatever?
Mm-hmm.
How many times does that happen? Very, very, very
So tomorrow, if you think this is
small
going to happen
percentage.
again, and you load up at $1 and you buy 20 contracts because you're like, shit, if they went to 25 and I've got 20 contracts, holy shit, that's insane. 40 grand, whatever stupid amount that is. Yep. But you load up 2 grand and then it reverses on you or doesn't continue. Take your profits when you have them. If the S&P returns 10% annually and you get 100% in the single fucking day, you need to close the majority of your positions out, maybe leave a runner. If you can't afford to leave a runner, then you should not be playing the woulda, coulda, shoulda game. The woulda, coulda, shoulda game is going to leave you broke as fuck. Okay? Nobody's going to give it to you straight like that. If you don't like that I'm cussing, I really don't give a fuck because that's the truth. You know why? Because I learned it the goddamn hard way. So many times, back when I started, my biggest overnight trades or daily trades, okay, came with my biggest losses following the next trade. Because, 5 grand, fuck, double it down. It's going to do this again. And it doesn't. And then you lose all and maybe even more of the initial shit you made. And then your psychology after that is completely fucked. Okay. So if you don't like what I'm saying because I'm cussing, then trading isn't for you. That's the first thing. Second thing is this. Who gives a fuck?
Mm-hmm.
Who gives a fuck? I don't care. If I caught the entire move of every fucking trade ever, I wouldn't be sitting here teaching you guys this. I would be blacked out right now. It's 6:18 p.m. my time. I'd be so filthy rich. I'd figure out a way to drink money. Okay. That's just the truth. You cannot worry about shoulda, coulda, woulda. You need to worry about what's right in front of you. If you start watching your P&L over just executing the trade, that'll happen to you. But who cares? It went to 25. Great. All you are identifying today is this trade going to go in the direction that my trade plan says it's going to go? It did. Sure, you sold out at $1, whatever. It went to 25. Sure. Great. Nobody gives a fuck.
You still
Nobody gives a
executed a
fuck.
good trade.
You made 100% in one day. 100%.
Yeah. It's
now do that 100 days straight. You won't even give a fuck about that. Oh, I missed this percentage. Oh, I missed it. Why? By doing that shows you're greedy. It shows that you're not executing. It shows that you just want the money. And the next time you get into a trade and you think, oh, it could go to 25 and it doesn't, then you're going to be upset with yourself for thinking, oh, I had 100% and now it's red.
Yep.
Okay. Take what the market gives you and move the fuck on.
Yeah. You can't look back in the past. It really mess up your psychology if you keep. And then another thing that's doing is you're pretty much putting a negative connotation on a positive good trade, right?
Yep.
Because now you're saying, oh, my trade wasn't good enough. So now you're pretty much saying, oh, I failed, but you didn't. You executed a good trade, right?
Yep.
So trading's already hard enough. You can already be down on yourself enough, especially when the losses occur, you lose money.
Absolutely.
So why are you going to be hard on yourself for something that you executed very well, right?
Yep.
So you kind of have to just forget about it. These yes, these days happen. But so what?
How many days have we had a downtrend day in the last fucking month? So one day out of 20, you're going to sit here and be like, I'm crying over spilled milk. Who cares? Who cares? Honestly, who cares?
I think I saw Umar Osh. I can't say his last name, but Umar from Tradezilla, right? Crazy good trader, makes millions every year. He left a lot of money on the table today, right? Yep. And he is one of the best traders that hands down, one of the best traders that I know that's out there.
Yep.
Umar Ashraf. I can't really say his name.
Yeah. He's a great trader. Nonetheless,
he said,
doesn't matter what his name is. He's a great trader.
He said the same trade I made 27,000 in the contracts went to 7. I sold at 110. That's roughly another $300,000 that he left on the table.
Yep.
And he actually said this is a good thing. He said, this is trading. Our job isn't to catch the whole move. It's to play the trade that is defined by our edge and risk. Bingo. If we keep going back to what if mindset, it will easily carry over to the next day and tend to mess up your trading.
Yep. Every single one of us is more than likely out of high school. But how many times did we all look back and go, oh, I could have been something great in high school. Shoulda, coulda, woulda. Nobody gives a fuck. Nobody gives a fuck. You're going to be that drunk dude on a Tuesday afternoon at your local dive bar talking about how you should have made the state champion and you were the co-captain of your fucking high school football team. Nobody gives a fuck, dude. No one gives a fuck.
So to move on from it, leave it alone. You made a great trade. The best of traders absolutely shit the bed today. I know a lot of traders across the entire market that didn't catch the move down at all, or if they did exactly what you guys did. Caught a little bit of it like we did. We caught a little bit of it today, this morning for 100%, 124%. Did we catch the whole move? No, we didn't. Mostly nobody really caught the whole move, right? So the best experienced traders didn't. So move on. Let's move on to the next trade. You guys did good.
Yep.
When you get wins less than you get losses, how do you let the runners run, risk losing the profit you have at a moment? You just let them run, right? As long as it stays in the trend. The 5 EMA, the 8, or sorry, not the 5. I mean, some people use the 5. The 8, 9, and 13 EMAs are usually the best. You stick in your runners, you take out a core position, right? You sell out of a core, right? That's when we say C20, take 20, and then let your runners run until that trend breaks, right?
Yep.
And if it does trend and does start to trend, great. If it doesn't, you move your stop loss up to either break even or right above break even
and profit. And
still in profit, and then you move on. Yep. But you will hit a time where you're going to have a good trade. I think from today's example, right? Again, took 3 trades on bounces. One went 30, next one went 42, right? I kept trying to leave runners to see if I could catch a big move up. All right. The first 2 didn't. I mean, they're still good trades, but then what happened on the third one? Boom, 100%, right? So you keep hitting those base hits, you keep leaving runners, and eventually you will catch one that goes that 60, 80, 100, 200% leaving the runners, right? But keep taking the base hits, eventually you will hit that home run on those runners. Been guilty of not accepting the PA, gotten into calls, puts, and seen to have blinders on for the other side of the trade bad. Yeah, it just comes with time because of experience. We all get into it. Sometimes we do get really biased on our trades and we want to hold. But it just comes with experience where you'll lose enough times to just cut and either re-enter or hop into the opposite trade. It just will come with experience. Thank you guys. We typically stop making calls by 3 hours into the market. I'd say 99% of the time we are done by 3 hours into the market, 2 to 3 hours into the market. Yeah, being on it, being able to accept the loss and re-enter completely unbiased, it was a game changer. Absolutely, something you got to know. Oh, this is a good question. We could start here. How did Mr. Banks and No Risk, No Premium meet up? What made you guys start up the Wolves?
Wow,
great question.
Good question.
We were on set filming. and he was my co-host. No, I was kidding. No, well, actually, we met online through Twitter. I actually started the Wolves before I even met No Risk in November. I believe the first day was November 28th or 27th of 2020 was when I first started the group. So coming on 3 years now, which is pretty cool, pretty exciting. But I was in the group. We were doing it. We were doing a lot of penny stocks at the time. Penny stocks were booming. And so at that time I was trading, we're doing all that. I was doing good. And then I was like, you know what? I need to expand. I want to expand a little bit. I saw No Risk on Twitter, absolutely killing it in the options game. He's funny, obviously I think he's funny. No Risk always makes
some might disagree.
But I talked to him. I said, hey man, do you want to join the group? He said, yeah. I was like, well, cool. I want to bring you in. I want to, add maybe an admin, add more people, kind of build out this group a little bit more. You look like you know what you're doing. Came in, freaking called insane banger. One of the first bangers. He helped me make 30 grand on coin on
shit.
I know I don't play earnings, but
yeah,
threw in 3 grand on an earnings play, made 30 grand, and I was like, cool.
Yeah,
but anyways, I flew out to California, met up with him. We had a lunch date, a little nervous, but we got through it. And then, yeah, that's how we met. So pretty much we met on Twitter. I said, hey man, you want to grow this thing together? He said, yeah. And so from there, we kind of just have been growing it since.
Yeah, it's a little weird. First time I had somebody slide my DMs that was not a female. So a little different, a little awkward. No, yeah, that's pretty much how it happened, guys. I was a lone wolf, pretty much. I was just traded on my own. I'd never been I didn't even know what Discord was. I had just kind of gotten on Twitter and I found out what FinTwit was, and I was like, whoa, there's like a whole community of like people that trade. I'm like, wow, this kind of cool. Like, shit, all right. And then I was just kind of was myself on how I am now, but on Twitter, I'm not nearly, pretty much not existent on Twitter now, but I was just kind of funny, and I just talked through some ideas and stuff, and Justin hit me up and say, hey bro, you seem like you know what you're doing, blah blah blah. I have a group. Would you like to come in for free and just check it out and see? And we don't do options, and I think you could be a great asset. You want to, just come and check it out. And for me, I just have been trading by myself for years. So I was, hell yeah, let's do it. This is cool. And I went in, and the group was not what it is now. It was, if there was like a 4-hour gap between messages in the main chat, like that was normal. Like there was nobody in the group. But we started, and I just kind of started talking about, nobody knew what options was. It was like another language. And they're like, how the fuck is this guy getting like 100% in the same day? Like, what the hell? And came in, and then, he kind of probably was testing me a little bit. And then he kind of was like, yo, it seems like you kind of know what you're doing. And then he goes, he sent me a message. He sent me a text and goes, hey bro, I'm flying out. Going to be in Venice on this day. I'd love to meet. We should meet. Let's go get lunch. Let's talk it up. And we sat down for lunch, and he was kind of telling me, hey, this is what I got. And I kind of told him, I said, I think you got something really good going. And so I want to grow it. And I said, I'd love to be around to help you do it. I think this is something that, as long as we got the right goals and ideals in mind, I think this is something that we could make a big impact on and do some real good stuff here. And I'm not gonna lie, Justin, you can maybe tell it different. We talked about growing it. But I in not any of my lifetime thought that we would get to where we're at now, 2 years later, 3 years later, whatever it is. And now we're here, and it's still so surreal, but it's a blessing. You guys have no idea the impact that you've had. Personally, I'll say on my life personally, trading is a very you look at pulling up the tweet that
this is pretty much what got me.
This is the content I'm here for.
Yeah, I
Yeah.
said, obviously I said this. I think it was a red day in the market, and then No Risk comes in with, this is the content I'm here for.
Yeah,
And that's
dude.
kind of what
Fuck
draw
yeah.
me his attention. I remember this tweet. I remember exactly this tweet, and that's how I found
That's
it.
so
But
funny.
that's what made me
Yeah.
be like, oh,
I'm
who
pretty
is this
sure a
guy?
month, it was not even a month after this, you
Yeah.
said you were flying out. It couldn't have even been a month. I remember it was early spring. Yeah. But you guys have no idea the impact you have on just me personally. It's, trading is lonely. It's extremely lonely. It's fucking hard. And to be surrounded with like-minded people, to be there to help. Justin and I talk about it all the time. Being the person I wish I had it when I started, that would slap me in the fucking face when I would do everything stupid, which is why I end all of my videos with don't do anything fucking stupid. Is because for 3 years I had a note on my desk, and I got to find the picture. I'm not lying. This is a post-it note. And it literally just said, don't do anything fucking stupid. And I had that on my computer desk for probably 3 years. And that's why I say that to you guys every time. You guys might think he's just fucking some idiot that has no other greater vocabulary than cuss words, but that's the reason. And Justin and I talk about it, having somebody that could, first off, just even talk to about something other than societal norms in the stock market. And then, secondly, just have somebody that could hopefully hopefully you guys think that what I have to say is worth a fucking damn sometimes, or maybe I know, 10% of what I'm talking about. It's just, wish I had somebody there to do that for me. It would have saved me a lot of time, would have saved me a lot of money. But yeah, that's so I want to say thank you guys for being here. It means a lot. You have no idea. It's something to wake up to every day. And thank you to Justin for sliding in my DMs. I didn't know I looked that good in my picture, but I guess I did. And now the rest is history, apparently. So yeah, that's a little bit about our story right there.
That's how the Wolves
Yeah.
was born.
Yeah.
Good question. Is 50 cents range? Yes. So on Tesla, we took this Tesla trade the other day, 2 days ago. Had a level down here, 265, put it in the chat. Said, I'm looking for a bounce at 265. Came into that range, right? As soon as it started coming, made this candle down, I started buying right here, right? Started buying within this 50 cents range, right? Started coming down to this level. As soon as it hit that 265.50, I started buying into it. I do like that 50 cents range. Now you still have to watch the price action. Just because something's coming into your level doesn't mean, right, I'm just automatically going to start buying into it. But we were down, right? We were down 7 points, I believe. Yeah, 7 points. Coming down to my major level, 265 was a good opportunity. So, stocks will bounce not at your level all the time, right? They won't always bounce exactly at your level or reject at your level. They'll do it within a 50 cents range, right? So 50 cents range is what I like to stay in. Anything more, I don't really like. Anything less, obviously I do like, because it's coming to the level, but 50 cents range is a good place to start.
Yep. You guys got to think, when you put a level in, that level is telling you the direction that you're looking to take the trade in to go to the upside. After a 7-point down day, getting to a support at 265, Tesla on this chart, that's not your short level. That's a level you're looking at for a bounce, reversal, or a possible long, right? So then you start looking up for cues that this thing is going to reverse, right? And even just here, I mean, that almost looks like pretty much 265.50 for the most part, maybe a little less, but it wasn't directly at 265, but it's pretty goddamn close, right?
Yeah, it says
So
like
at
265.41.
41,
Yeah,
9 cents off. Okay. So at some point, this is where traders have to be traders. We are professional reactors. We're not predictors. We're not fortune tellers. We're not any of that. Okay. We are reactors. The Fed has raised rates for the last year and a half, and the market goes up. Does that mean we take puts every single time the Fed speaks? Absolutely not. The market is telling us to react in a way that there's upside, so we need to react in that way, right? If the market was that easy, everybody would be fucking rich. All right. Everybody would be fucking rich.
Am I still in Tilray? I have a small position still, but
Yep.
more of a core position's out. It's an equity trade. You're up over 30%. there's no reason for me to like keep holding a huge core position in that.
Yeah.
Um,
How to work a
EA
stop
calls.
loss on a 25K account. I think I went down a little bit from where
Oh,
we were. This is a good question though. I think I lost. How to work a stop loss on a 25K. I would just tell you this: a stop loss on any account when you're trading options, anything that is dated less than 2 weeks, it should be a level. It should be a level that would invalidate the trade. A level on the chart, not your stop loss, because there's been so many times a contract you buy, it goes down 40% and then it ends up going 200%, right? We've seen that over and over and over. I'm sure you guys have seen that. It's because options have extrinsic value outside of the price action on the chart, it will fluctuate the premium of the contract. If you have a 20% stop on a 0 day, it's more than likely that gets hit from your entry unless you are sniping the absolute bottom of that contract. And I'm going to tell you this, as good as you guys think you are, you will never buy the bottom and you'll never buy the top, and you'll never sell the top either. You need to accept that. Okay. You need to accept that.
can I explain what I saw in BA today? When decided you cut bait? Pretty much I chased. Gonna be full transparent. I was looking like we were trying to break up. Looked like we were trying to break up here. Chased a little bit, and then as soon as we pushed up here, couldn't make another high, and that's when I decided to cut the trade.
Yep.
So chased it. Full transparency. Happens, right? Because it's gonna happen sometimes.
We're human. We are human. That's gonna happen.
But yeah, pretty much bad trade. I chased it. Looked like it was going to pop some more. Yeah, I don't know. I just chased it, to be completely honest.
Still can't find someone to tell me what my contract is worth if I bought a stock when it's 200. What are my contracts worth when the stock hits 300? Well, there's the options calculator, right, Justin?
There's an options calculator. Yeah.
You can type all that info in. It'll tell you exactly. I could tell you this. The minimum your contract would be, the absolute minimum, if it is $100 in the money, like this example, you bought it when the stock was 200, you bought the contract, stock went to 300. If you bought the $200 strike on the contract, on the stock, the minimum that contract can be is $100. Minimum the contract could be is $100. But more than likely there's IV, there's Vega, there's Rho, there's all these external factors, extrinsic factors that you can depict by plugging into this options calculator. I'm sure it's in our chat a million times. Somebody, if you guys know it, drop it in the chat for Anthony. It's like optionscalculator.com. It's like very straightforward. You will be able to get your contract pricing from there.
Is a stochastic RSI a good indicator to catch a change of trends? Is that something that I don't use it? If it's something that you can use, yeah, there's plenty of things that people can use to call a trend change. I don't use that indicator, so if you want to use it, or you could look at videos on YouTube of people who use it, can't really help you there. But there are a bunch of different ways you can call a trend.
Doesn't mean it doesn't work.
Yeah,
but you just need to go through. I would tell you maybe go to YouTube University. That might be able to tell you a little bit more. Somebody that does use that indicator a little bit more with some success might be able to shed some light. Yep.
I know you're on the videos, you mark all the levels. You said maybe not putting the level at the top of one random super tall wick, since it was not really representative of the action. Maybe put on a lower wick body that's near the other bodies or wicks. You do have that right, because that one major wick up, I don't know if I can find an example just right off the bat, but let's see. Yeah, like this one, like, you know what I mean? Like we had this one crazy wick up, really wouldn't use that too much, right? The level it really respected more was yesterday's high. These crazy wick ups are usually, or wick downs usually are just, you know,
single prints. They're not, they have to be on the chart, but they're not. Like, because think about it this way, just look at that candle real quick. If that was such a strong buy that went up there, wouldn't it just continue up? Right? You went from 455 to, or whatever that just single 5 minute, single 5 minute candle went up $1, $2 pretty much. If that was, there were so many buyers in that candle, wouldn't it just continue up?
I
right?
mean, same with today. If it came
Yeah, see
down and
that huge
touched
wick.
this
Yeah.
level
Mm-hmm.
and it came all the way back up, there's no way if all these buyers, if this technically filled the gap and we
Yeah,
had all
yeah,
these buyers push this all the way back up, there's no way this thing is falling down, right?
yeah.
So yeah, these super long wicks are just an anomaly,
Yeah.
is what I call them.
For to make it sound way more, it'd be like poor structure, but that's
Yeah.
like that's terminology that it really doesn't matter. I wouldn't look too much into the wicks. I would mark it. I'd also mark, like, if that single candle is the candle of the pre-market high, I'd mark the nearest body close candle to that level as well and put like a box in there. And so you know it's a little bit of a range that's the pre-market high or pre-market low or whatever. Right.
When I call a hedge play, um, whenever you call a hedge play, it was mean the previous trade to the hedge has to be cut, or should you just wait? I just wouldn't trade hedges.
Yeah, I
Um,
wouldn't. Yeah.
and like I said, like I talked about earlier, it's probably my third and fourth hedge plays that I've traded all year. And to be completely honest, it's because I'm just not seeing the market right, and I can deal with hedging my position, but at the same time, right, I'm closing on a house, I'm trying to move into a different city. Uh, Personally burnt out this week. If I want to be completely
Yeah.
transparent, super burnt
Yeah.
out. Just don't have the mental capacity to really see the market super well this week. But yeah, just don't worry about hedges. I
I
would
would
just
not
just
make
don't worry about hedging. Don't
hedging part
hedge.
of your
Yeah.
strategy. Just wait for your levels and trade around your levels. Right. And if you don't have a clear inclination of a level or an area, then don't trade it. That's it. That's really
Change
it.
of structure, I would typically just wait for intraday action. Usually you typically use that on the 2-minute time frame versus the larger time frames.
Will you watch for an inside day tomorrow? Probably. I mean, look, dude, if I could if I could tell you to watch for every day, then I would. Uh but for me to take the break of yesterday's low, or yesterday being today, it's tomorrow. Yesterday is today's action. To break because the trend is up. If we're going to break yesterday's low, which would tell you continuation of downside, I'd likely wait for a retest of that level if we broke underneath it, only to not get caught on the bottom end of the structure and get caught in a liquidity grab. That's what I would personally do.
Level tolerant to cut 10 cents, 20 cents, 50 cents. It really just depends on the trade. Really just depends on
Yeah,
the
the
trade.
level. I
Like I
think it's
said,
more the level.
it's hard to give you an exact thing. The biggest thing, does this invalidate my trade? Does this invalidate my trade? So say if we're taking calls here, right? And we're in these calls for today. I took calls here initially. My level would be below here. My stop was below here. Never broke below, went back into demand, entered up. So it really just depends on levels. That was about a 40 cents difference right
Yep.
there. But
Yep.
it just really all depends on just levels. It changes every single time. The easiest way I can explain it is, does this invalidate my trade?
Yep.
Obviously, we don't want to look up here and be like, I bought calls up here, and then be like, oh, well, I need it to break this low, right? So you're not going to be like at 458.20 and say, oh, I'm gonna wait till 457, depending on the dated swings that you're taking, but especially like 0-day or 1-day, even the weeklies. Yeah, it'd most likely be this level right here that you'd be looking at. Say if you bought calls here, I'd probably be looking at a break of 457.80. You have 458.16. Probably be this level right here is where you would look to take to cut the trade.
Yep. How many accounts have you blown, if you mind me asking? Oh shit. Look, when I started out, I mean, granted, when I started out, it was, you dump 200, 500 in, 1,000 maybe. And if you don't know what you're doing, that could go to zero, that could go zero that same day. So, fuck, when you first started out, it just depends. Like, if you put 25K in, it's going to be harder to blow than not necessarily, because you could obviously do something really fucking stupid with 25K, but you understand, well, it's a lot easier to blow a smaller account than it is a larger account. But of course, if you have no risk management or just no perception of any sort of risk tolerance at all, you could blow any sum of money. It doesn't fucking matter. But I had my fair share of some back in the day. And it's definitely, it hurt. It's like a gut check for sure. How many? I don't know. First starting out, yeah. I don't
Too
know.
many to
I'd have to
count.
go. Yeah, I'd have to go look at my deposit statement from years and years and years ago and just see what it was. But the best thing you could do is get with a group of people, whether it's us, whether it's someone else that does it better than us. I don't care. I want you to succeed, and hopefully learn a lot before you do something stupid like below 25K. Right? Everyone talks about there's a market tuition that you pay. There is. I mean, there's a tuition, anything you pay or anything you get into and try to learn. There's a tuition. Start a business, likely going to fail your first few businesses and do things that are dumb and blow money that you shouldn't have and spend money on things that you shouldn't have. And you're just going to have to learn from it. It's just like trading. Same way, but more than one is the answer there. If that's what you're looking for. So yeah, that's for me at least. I'm sure Justin probably, I don't know. He started a lot. He started I don't know, years before I did. So probably I would say it's probably the same. Yeah, everybody has it. It's hard. It's hard, especially if you're the hardest thing to do is grow a small account. That is, to me, that is the hardest thing to do is to grow a small account. So just being honest and transparent
Absolutely.
there. Yeah. What is liquidity? What does a liquidity grab mean, and how do you spot it? Liquidity grab is the stock that trades below a large support or demand area for a short time, meaning it's grabbing liquidity down below and then pops right back up. You'll notice it usually on like a 5, 15, maybe 30-minute candle. You'll see a wick underneath the previous day low or a double bottom or what have you. And then a bounce back up within that same day usually. And means it usually is going down to grab liquidity, grab more buyers to try to make its way higher. For the most part. If that didn't make sense, go on YouTube. And I know that there's somebody out there and say, what is a liquidity grab in the stock market? And I know that there is a video out there for it. What is it?
What is how to identify market sector rotations early? There's a thing called relative rotation graph, RRG. This will show you which indexes are lagging, which ones are leading, and it kind of shows you a nice graph like this. It's called the RRG, relative rotation graph. This will show you what's lagging. Something I need to use more, to be honest, to be completely honest. The NASDAQ obviously leading. And then, yeah, it'll show you exactly what's lagging, what's leading. And then you can kind of get into into it, right? And then you can kind of move, okay, what's lagging, from the different weeks, right?
Yep.
So this is a good one to know.
Yep. You can also look at, you could look at SPY, QQQs, and IWM, the three simple ones that we use. So you could see a rotation from small caps into large caps or
absolutely
what have you. I wouldn't do all of your trading around that, but it is good to see when
FinViz also has
FinViz has a great
sector
one. Yeah.
performance. So you could see, okay, what, obviously breaking down into, okay, one relative day performance. All right, real estate was the worst today. And we can kind of keep going down, right? What was the worst 1 week performance? Okay, real estate's lagging. And then we can kind of look in that. We can look to see what is the worst half year relative performance. Real estate, 1 year relative performance, real estate. All right, so maybe it might be a good time to snag some real estate, right? Some REITs, right?
Then it's going to have all your tickers in there of, different real estate.
So one way is the RRG, relative rotation graph. Another one is going to be FinViz has, if you go to FinViz, you go to groups, it'll show you performance as well. So a couple different things you can look, or like Chris said, look at SPY, IWM, look at Dow Jones, look at any of the big indexes and see, okay, what is
outperforming?
What is outperforming? What's not? So there's three different
FinViz,
ways.
I think, is probably the best one. I mean, I think personally, because it kind of gives you each broken down, and then click on it and give you the tickers and shit. I like that a lot.
Yeah, so you're like, oh, energy's kind of
energy.
So real estate looks like the worst. So we can go look at real estate.
Yeah,
and It gives you all these different charts
Yeah,
that are in
you
real
can.
estate.
It's 24 fucking pages, so have at
And what's cool is like you
it.
can be like, oh, I really, I really like this one. And then what's cool about FinViz is you go there, gives you all this information. Now, is all this information exactly up to date? For the most part, yes. But it's not always the exact up to date, but for the most part, it is pretty accurate. Gives you all of this information, gives you recent news on it. Also, this one's too small, but let's see if this one gives you the most recent buys or sells of the insiders, right? President, CEO just bought May 15th. General counsel just bought May 15th. They were
Yep.
buying in May, a bunch of
Mhm.
shares at
If
512.
the insiders are buying,
Could be a good
there's
indication.
speculation,
Yeah.
maybe some speculation that maybe something good might happen for them in the company with news or a project or something. Maybe if every single executive is dumping shares of their company, they know something, right? So now that's I'm not going to tell you if they're all dumping shares, then you just fucking short it. No, you got to
Well,
do
no,
your own due
because if
diligence from
we
there. But
take a look at Walmart, right? Walmart keeps pushing up. And then what
there
happened?
are a lot of people are selling there. It looks like,
It's been
yeah.
dumping shares this
So
whole time,
is exactly,
right?
you got to use your own discretion, and obviously, but somebody
Uh,
asked about date expirations. Guys, new account holder, do not trade 0 day. Just don't do 0 day unless you are a master scalper and are great at buying highs and lows. Do not do that. If it's any day in the week, just play a weekly expiration, play Friday. The best thing you could do is buy 2 weeks out. You have to have a little bigger of account to do it. You have to have a little more money, but time is the ultimate luxury, right? You're going to have to pay a little bit more for those premiums, but you will not panic sell. You will not need to move or trade to happen very quickly. And you will be able to allow the move to happen, and you'll be less stressed out knowing that you have a little bit more time, right, on your contracts. So hope that answers it for you. I don't play, Justin plays 0 days on SPY or Qs or whatever. That's fine. I personally don't. He's not right. I'm not wrong. I'm not right. He's not wrong. It doesn't matter. It's depending on you. But if you're a new trader with a smaller account, that's about as high risk profile as you can get. And you don't have the appetite for that because you're about 4 trades away from blowing your account, right? With a small account for the most part, right? So what in your experience are the best days, months, etc.? I wish I could tell you. I think Fridays you take it light, Mondays you take it light.
middle of the
Most
week
people
is
I know
usually
that make a
best.
ton of money do not even trade on Fridays. They take a 3-day weekend every weekend. So take that information as you may. It doesn't mean you can't trade on Friday. It doesn't mean you can't make money, but take that as you may. Monday, you had a whole weekend for the market to absorb news and headlines and stuff. So sometimes Monday could be a little wild, right? That's just my experience of what I've seen. So take that what you made. I wish if I could tell you there was only one day to trade, you should only trade that day. If I had it, then I would tell you because I would only trade that day.
Another thing you
Right?
can look up is seasonality charts. This will tell
Yes.
you pretty much the average of what's happening, give
Mhm.
you the best on average the season of what
The
did
performance.
best performance
Yeah.
of the stock. So you can look up seasonality charts
Seasonality is another
as
one.
well,
Yep. Do not fall in love with seasonality, but yes,
which is, yeah.
it can allow you to be a little bit more of confluence to what you're doing. Typically sell in May and go away, meaning sell in May, start of summer comes, and you typically, a lot of people are just buyers in the summertime. That's just kind of what it's been, right? That doesn't mean you just full port everything, but what have we seen this summer so far? We've been in an uptrend, so seasonality has kind of been working out, right? But it's not the end all be all. I don't think so by any stretch of the imagination. Um, hold
The
on.
line above I drew after. So if you're talking about this level, um, this level above was drawn after. I didn't have this level on here. This level was drawn after the bounce. Cool. Um, Don't always have to buy the bottom or sell the top. Absolutely.
We're probably getting towards the end here, guys. Not to try to cut us short, but
break a market structure to exit a trade.
I'd say
Yeah, I
yeah.
mean that is a
Yeah.
always good way to exit a trade. Absolutely.
Yeah.
I
Yeah,
use
yeah.
koi fin for sector rotations. I'm beginning to see a shift. Energy is picking up some steam. Yep.
Yep.
Okay. So koi fin's a good one.
XLE would be the energy
Yeah.
sector of SPY, right? So you can look at that, just that ETF by itself.
Most of my analysis is not based on any kind of date trading at all. It's based on levels, and those levels are good for any kind of trading.
Yep. Yep.
It is not based on 0 dates. It is not based on 1 dates, right? We're basing it on levels, like we talked about. If we're buying at a level, you can buy a weekly or 2 weeks out, the same trade.
Yep.
But yes, no, it's not a base. I don't base anything on 0 day trading.
Yep.
I just draw my levels and I trade my levels.
Exactly. That'll go for this question too. Do you ever take any after hours or pre-market trading for futures? You can't trade options after hours. Most things I trade. Futures, I trade S&P 500 futures. I don't like to trade after hours or overnight session for the most part in ES. Specifically, I do like to, if I'm up, awake, and coherent and not a zombie, because it's very early here on the, on the West Coast. If it does reach one of my levels, I can take a trade. But for the most part, I prefer the cash open, which is just the 9:30 open. It's most liquid. It's easiest to follow. Typically, it follows your levels for that part for the most part. But yeah, if you're going to be taking equities of like maybe a Tilroy after hours or just something like that, yeah, you can if you want. It's just the liquidity is less, so just know that the bid ask might be a little bit wider than during the cash open. So yeah.
Did I start trading career drawing and trading levels, or what was the first systems I had? My first systems I had was, I like this stock. Oh, this stock seems to have good news. I'm going to buy into it.
He's
It
playing
pretty
the
much
momentum.
was,
Yeah.
it wasn't really a system at all. It was pretty much blindly just buying different stocks of like,
Yeah.
oh, this company
This
seems
is
to
running
have
in the
good
pre-market.
news.
Yeah.
Yeah,
Oh,
or
this
that. Yeah.
this looks good. Yeah.
Yeah,
Okay.
this looks
Let's buy
good.
this. Yeah. That's a big green candle? Yeah, sure. Why not? Oh,
I'll
fuck
tell you, I don't even think is it Sun? Let me see. Sun Energy. So this company I bought in. I lost $3,000 on it.
Oof.
This was one of those companies. It was like kind of my first.
Just a pump and dump, probably.
Yeah. Or Sun Edison.
The pink
Sun
sheets.
Edison is Sun Edison.
This
Yeah.
boy was on the pink sheets.
Sun Edison Corp, right?
Sun Edison.
Wall Street boom and bust story.
Justin was part of the bust.
I was part of the bust. So this company was pretty much so yeah, this was kind of like going into the beginning of my trading, right? It was kind of I would just buy companies just because
Looks good.
it looked good. I had information of like, oh, this company is
news,
the largest solar company in the world. There's no way they're going to go out of business. It was up over 2,000%, and then it was down to like $1 something. And I'm like, oh, okay. I think I'm going to buy into this company because I'm going to throw all my money into it. And then even if it goes up, I'm like, dude, if it goes up 1,000% or 100%, I'm like, because it was like $1 something. I'm like, if it goes back up to $20, that's still way lower than what it was at its high. I'll make so much money. And you guys can see, I bought in 2016, beginning of the year,
trading,
April 2016. Sun Edison stock was delisted from the exchange.
Gotcha.
And lost all my money. So yeah,
the old-fashioned rug pull. Yeah.
So yeah, in the beginning, it wasn't about charting at all. It was kind of like, oh, this kind of looks good. This, kind of just basing it off of news and what I think would be a good company to invest in.
Yep.
And then eventually I was like, okay, I want to be a real trader. And that's when the charting started.
Yep.
Yep.
All right, guys. I think we got through. I think we got through hopefully every single question. If we missed it, then we'll have to get it more than likely on the next one. But I hope you guys enjoyed that. If you enjoyed it, type yes or give us a thumbs up or something so we know.
But thank you guys always for coming out. Always appreciate your time.
Yeah, appreciate you guys a lot. Thank you so
Again,
much.
we're here because we want to make you guys better. I think the one thing that really bothers me, and I know we do alerts and we send alerts, is there's a lot of people out there that just, frankly, they're lazy. They're not going to make it in trading, and they just like buy into something and they're like, oh, I'm just going to buy an alert, right? No trader is going to have 100% win rate.
Never.
Right. This week specifically, I'm 20 for 24. Right. But some people will make it seem like I'm 0 for 24 and I just have the worst calls and I'm the worst trader in the world. Guys, there's going to be times where I lose. So appreciate you guys for actually being here to educate. Right. No successful trader has 100% win rate. I can navigate the market very well. I think my wins speak for themselves. I do think my win rate speaks for themselves. So I guess the point is I appreciate you guys that come out here to actually learn and try to get educated. And you're not just in this group for just alerts. Do we absolutely call bangers? Do we kill it? Absolutely. Is our win rate probably the best out there? Absolutely. But again, there are people that are just like, oh, I took one call and I lost. You suck. I'm out. Right. So appreciate you guys for coming out and actually learning how to trade. Right. So there's going to be times where you lose. There's going to be times where I lose. Right. But if you understand what we're teaching with proper risk management, how to handle trades, how to cut losses, hold winners, then obviously you're going to be making out very well. Can you see the price action has not been great these past 2 weeks? Absolutely. We'll end it on this one here. Let's take a look at SPY. I mean, look at this. We've been nice trend, right? Nice big trend up. It's just been buy the dip. And then these past 2 weeks, right?
Look how many candles right next to each other?
Balance, right?
Tough. This is tough to trade.
There's really no upward movement. There's really no downward movement. It's just very like, I mean, look how small these candles are compared to how big these candles are, right? We're getting some nice big trades, even to the downside, but right, balance. This is a very difficult market to trade when we are in a balanced zone like this. If we have big push-ups, makes it a lot easier. Big push downs makes it a lot easier. We're in these small trends. But overall, if we get into a balance, this sucks. This is hard to trade. I mean, we could even take a look. I mean, even before we had this trend, right? It was kind of hard.
Look how sideways we went for like a couple months. That's tough. That's tough trading.
Hard.
When the market gets choppy, i.e. balancing, i.e. candles right next to each other, trading gets sloppy. When the market gets choppy, trading gets sloppy. Right.
So this is why it's been more difficult, especially because the market's just kind of been in a balance. I mean, if we take a look, I'll just go here real quick, just because I like this chart. SPY, I mean, look at that. Completely overbought, right? We're getting hot, still going up. The bearish divergence finally playing out. Completely overbought, right? But we're kind of just tiptoeing up, right? This gets to be a very difficult thing to trade when we get into sideways action. So yes, to answer your question, it has been a tough 2 weeks, but it gets better. This is trading.
It will always get better.
There is always times where you feel like I suck at this. I don't know how to trade. I'm going to give up. I hate the market. And then there'll be times where you're like, I don't know why I thought that. This shit's easy. I'm fucking making all this money. I got this down. I know exactly how to trade. I'm the best. And then it's like, nope. And then
that motherfucker kicks you right in the nuts.
The biggest thing with trading and to understand too is, guys, if you're going to be in this, be in it for the long run. This isn't a get rich quick overnight scheme. 5, 10 years, 15 years, pretty much your whole life if you want it to be. But
you're always getting better.
Yeah, you're always getting better. If you're always playing the market, the more you're in it, not the more trades you take per day, but the longer you're in the market trading, as far as like years, you're going to hit patches, like for say the 2020 to 2021 run, right? Say you got into the market in 2018. Sorry. Okay. I promise I'll end on this one. Say you got into the market in 2018, right? And you're like, yeah, I'll go weekly.
Way back.
I'll go weekly.
Go weekly.
Say you got to the market 2018. You're like, man, I'm doing all right. I'm doing all right. Boom. And then it just market shits on you.
Oh shit.
And you're like, God damn, this sucks. But then you stay in it instead of giving up during this period. You stay in it. Nice little bull run, right? Nice bull run to, from the bottom of what, 238, we'll call it, to 340. Nice bull run there.
Nice.
And then you're like, cool. And then you hit this obviously 2020 crash.
2020.
And you could be like, oh, I'm giving up again. But then what happened? 220 to fucking 480 pretty much.
Yep.
I mean, so you got to think about it in terms and lengths of years staying in the market. You will hit rough patches, whether that be weeks, it could be months, but over time, there will be times where the market gets easier, quotations, where it seems like you're understanding it, you're getting it, and then that's where you make your money. And then when you're making your money during that time, practice good risk management, pull the money out of the market, invest into long-term positions, or just whatever you want to do with it, invest into other assets. The thing I can relate to is people in tourist towns, they have a tourist season. Say like a small mountain town, they have a tourist season. And what they do in those businesses is during the big season, say, whether it's 6 months out of the year, is where they make a buttload of money. So they work hard, they make all that money in the 6 months, and they learn to budget their money the other 6 months while the season is slow. That's the same with the stock market. When it starts to get slow, when it starts to seem a little bit harder, just, take a step off the gas, maybe trade with less size. If it seems to be a little bit more difficult, not getting it, kind of seems to be in a losing streak, cool. Either take a break or just trade with way less size. And then when the market seems to be rearing up in your favor again, and you're understanding it, seems to be clicking, and then you can size up again and you start to make more money, right? So it's kind of a foot break type of thing when it comes to trading.
Yes, sir. Guys, thank you for coming out. Truly appreciate it. I'll end it on this for me, and Justin could take us out of here. Guys, don't do anything fucking stupid. Justin?
Tomorrow, guys, like we say every Friday, no blown accounts. If you're profitable in the week, trade with only a portion of the profits. Say you're up $1,000, you trade with $200. If you lose that full $200 for whatever reason, you're done for the day, you're done for the week, you're still up $800 on the week. Life is good, you're green on the week, you're going to have a good weekend. If you're red on the week, best to just not trade, right? There's always another day to trade. If you're red on the week, figure out why, journal, maybe just paper trade. You could still watch the market, but just don't trade. You got to figure out what went wrong that week. And if you're red by Friday, we're already mentally taxed by Friday, probably not going to make the best decisions, probably going to subconsciously try to revenge trade or make your money back. Just don't trade. Come back fresh, give yourself a 3-day weekend, come back fresh next week, and then hit it strong, right? They'll give you time to forget about the losses, give you time to figure out what went wrong, and then you could start fresh in a fresh mindset for the next week. So again, if you're green on the week, only trade with a portion. So if you lose it all, you're still green on the week. If you're red, probably best to just not trade.
Absolutely.
Cool. Love you guys. We'll see you guys bright and early for pre-market huddle.